Well, it is official. Congress has passed the first major bill to overhaul all the taxes, and the taxes have really been affecting people.
Jim Heafner is the president of Heafner Financial, and he's known as the Carolinas retirement coach. He's a certified financial planner. He joins us every Wednesday to help us get financially fit. Jim, good morning. Thank you for being here today.
Good morning.
Sir, there is a lot of anxiety surrounding the tax code and people not knowing what's available. Now, when it comes to the tax brackets, okay, I got a couple of questions for you. Where does it line up? Where do we have with the tax brackets? Where does it affect us? And how have the tax brackets changed? And what is that change? And what does it really mean for us? Because that's what people are really concerned about.
Great question. So if you look at taxes in the most simplistic way, there's two components. The first thing is what your taxable income is, right? Then you multiply that times the tax rate in your bracket. So addressing the second part, the brackets, as you asked about, you know, there's still 7 brackets as there were before.
What are they?
Well,
not all of them, but
well, so they're pretty much like they were before. Before you had a 10%. So the way it works is your money flows up these sets of brackets, and the first amount of money you're taxed at 10%.
Yes.
Then 15, then 25, and on 33, 35, 39. So those brackets still stay there, but the difference is that you can make more money and be in a lower bracket with the new tax law. Okay. And in that bracket, the rates that are applied to your taxable income have gone down a bit, 1 or 2% typically, right? So the good news is there's a lower rate you'll probably pay on your taxable income. Mm-hmm. The bad news may be that your taxable income is higher. So the second part of that is what's your taxable income, and that's your gross income less your deductions. Now the bad news is that many itemized deductions have gone away, and your personal exemptions have gone away.
Okay, and let's talk about the deductions. So typically people get to go ahead to their mortgage interest, they get to do their property taxes, they get to the charitable deductions. So what deductions have gone away that's now going to be hurting us?
Well, so we still have the mortgage deduction on a current mortgage as it is now, $1 million. Right.
Gotcha. Okay, good.
On new mortgages, you're capped at $750,000 of mortgage that can be deducted, right? First and second home. So we have mortgage interest. State and local property taxes and income taxes are deductible as well. That didn't change, except it's capped at a max of $10,000. Now, that's why New York's upset. That's why California's upset, because your property tax could be many times that alone.
It's many times that.
Plus, now we have your income tax plus property tax. So that's going to hurt a lot of people.
So what are the biggest changes about the incoming tax law that you think people should be made aware of, and why?
Well, there really are a lot. I guess the one is the limitation on your state and local property and income taxes, your mortgage deduction limitation, HELOCs, home equity lines of credit, no more deductible.
No more deductible?
That's now a great tool, as it always was, but you can't deduct it anymore. Unreimbursed business expenses, you can't deduct. Alimony payments, you can't deduct. So a lot of things that we're used to deducting have gone away. Tax preparation fees, financial planning fees, you can't deduct those anymore.
I can't deduct those anymore. Done. So what does this mean for the retirees? A lot of retirees really pay a lot of money in taxes. So what does now the new tax implications mean for the retirees?
Well, you know, the New York Times did a study. They took 220,000 mock tax returns and ran them through the system on the 2018 tax law. And it showed that about 75% of people will pay less and 25% will pay more. So how does it impact you and me? You got to run the numbers and see. We just don't know. But typically, where there is a tax reduction, it's 1 or 2%. It's not a huge deduction or huge change, typically.
So overall, what does this mean for the average person who is sitting there watching? Is the tax code, does it help me or does it hurt me?
The average person probably is going to help you a little bit.
A little bit.
Okay. Yeah, it depends on your situation. If you have 6 kids, you lost 8 exemptions. That's $4,000 a piece. You lost $30,000 of deductions. So it depends on your situation. Bottom line, get some help. work with some CPA or a financial planner who has advanced degrees, not just a CPA, who's gotten more training, who understands these situations and how he can reduce taxes, because it's not a simple slam dunk. You got to have someone run your returns so you know what to expect this year.
Well, if you need help with your financial future, enlist the help of a trusted financial professional like Jim Heafner. The first 5 qualified callers to Heafner Financial will receive a complimentary, no-obligation financial review. The number to call is 704-552-1230. You must have a minimum of $500,000 in investable assets to qualify. Again, the number to call, 704-552-1230, or visit Jim's website. It's you'lljustknow.com, you'lljustknow.com. Jim Heafner from Heafner Financial, thank you. Great to see you as always.
Thank you, sir. Well, next on Charlotte Today, Winter Coast that